Hello traders, good day to you all. My name is Christopher Glen and this is the day market review for the current market status. Today it is the 22nd of May 2015. It is Friday and we've received several indications regarding the European market. We will see the strength of the euro in a second, but later on we're expecting to receive a Bank of England announcement that will definitely affect the pound. Then later on we will receive announcements regarding the Canadian dollar and the US dollar. We're talking about CPI reports. Later on at 1:30 p.m. we will receive indication regarding the euro from the President Draghi, the European Central Bank President Draghi, and again at the same time we will receive an indication from Bank of England and Bank of Japan. Very important announcements in a row. We're expecting to see high liquidity, very high volatility in the markets, and very late into the US market session, we will receive additional information from Glen, the chairman of the Federal Reserve Bank in the United States at 5 p.m. Let's go to the chart and let's try to give our prediction for the current market's potential. Going to the charts, we can try to analyze the strength in the market at the moment. We can see that the Swiss franc and the euro received additional strength. They are the strongest currencies for today for the current market status. We do expect to see some changes occurring over several currencies as we've just analyzed. The New Zealand is in the middle. It's not too strong, it's not too weak. The gold is in the same position, and we can say that the pound, the Canadian dollar, the Australian dollar, and the dollar are the weakest currencies that we've got for today. The weakest among them is the Australian dollar. Now we know that the Australian dollar and the New Zealand are very similar in terms of strength and weakness unless we've received additional information from that area, and we do expect to receive additional information that will affect the strength of both currencies, but generally speaking we can assume that they will move toward the same prediction, although the New Zealand market is under very hard stress because of interest rate changes that we're expecting to see there. Trying to find a good potential trade, we can say that the pound versus Japanese yen is expected to continue its downtrend movement, but once the announcement will be announced, our prediction is that we'll see a break through this trend line over here, and then we're expecting the market to continue higher, expressing weakness on behalf of the Japanese yen, while the pound is expected to gain strength. The euro is expected to lose strength. Again, I'm just trying to predict the movement according to the structure. Impulse movement down. We've received 5 waves. That's the first, the second, the third, the fourth, and the fifth. Completion of 5 waves, and an A wave, a B wave, and a C wave. So we might receive a spike toward this area and then a pullback down. That is our expectation from the euro. And obviously the effect that we can see on behalf of the Swiss franc and the euro just pulling higher at the moment is because of the announcement that we received from Draghi in the European section. Dollar versus Japanese yen for long term is expected to bounce a bit higher and then to crash lower. On the 15-minute chart in a structure, we're expecting it to climb a bit higher, but based on a daily chart, we can see that we're moving sideways in a very long-term corrective pattern. Analyzing this structure, we can see that we've received an A wave, a B wave, and our expectation is to see a C wave dropping down from that point and beyond. And we will have to wait until 5 to see what will Yellen produce to the market. Anyway, analyzing the dollar index, not like analyzing the dollar versus Japanese yen, is showing a totally different image. Let's move forward to the dollar index and see how beautiful the structure that we received. Going to the indices. Over here on the dollar index, based on a daily chart, we can see that we received a very long-term impulse movement, and then we received a pullback of an A wave, a B wave, and right now forming the completion of a C wave. When I mean the completion, I'm talking about 5 waves of an inner structure. That's 1, 2, 3, 4, and 5. 5 waves of an impulse movement completing the C wave, then our expectation is to see this chart climbing higher and at least breaking the last peak that we received at March at approximately 100. The 100 level is expected to break, while the additional information from the US market will add to the strength of the dollar. That is our expectation from this structure, and even if we'll move forward to a lower time frame, let's say an hourly chart, then we can see that again we've received an impulse movement climbing up, and then we received a pullback of a completion of a corrective pattern, and our expectation is to see this chart spiking higher. The dollar is expected to gain strength, and we can use the potential for stronger dollar in the market to express that in front of the gold, for example, or take the dollar and express that in front of weak currencies. In order for us to do that, again, I'm going to the Japanese yen, measuring the strength of currencies, and we can again say that the Australian dollar is the weakest currency for now, and my expectation is to see the dollar gaining a lot of strength in front of the Australian dollar, and obviously we can expect to see the same formation on behalf of the dollar versus the Canadian dollar versus US dollar. Again, weakness on behalf of the Canadian dollar and strength on behalf of the dollar will produce very nice profits upon an inner structures chart. Let's move forward and try to analyze the gold. The gold is forming a very nice structure of a head and shoulders on a daily chart. When I mean daily, when I'm talking about head and shoulders pattern, I'm talking about the left shoulder, the head, and the right shoulder. Now, what's so beautiful about this structure? Our expectation from head and shoulders pattern from regular currencies is to see the chart pulling back toward the 61.8 area. But when we're talking about commodities, we're expecting the chart to climb higher toward the 50 level. And over here we can see indeed a completion of an A wave, a B wave, and a C wave, dropping exactly at the 50% level. And our expectation is to see the gold crashing down as the dollar gaining strength in the market. I'd like to wish you all the best with your trades. Have a pleasant day, and bye bye.